these kind of like flow through share donations is something that the CRA came back like vehemently approving, and there's no issue with that. And I think maybe it's important to kind of just show the distinction, maybe just to talk about it to our viewers here, that there's these like bad schemes where you end up like making money from
Hmm.
donating, and you're like almost like, I'm going to say, pretending to donate, but you are donating, but you're profiting from the donation. In this case, you're not going to make money by giving the money away here. You're just going to have a bigger impact to the charity, and you get to save some taxes on that donation. So you're just reducing your cost. But if you're looking to like make money from some sort of like special transaction here, this isn't it. And that's just a very clear distinction, because I think I want to make sure that that's super clear to everyone.
Yeah, it's very clear. And one thing you have, I'm glad you're bringing this topic. So from a risk or compliance perspective, we religiously
Mm-hmm.
follow the tax ruling. So there is a fact
Mm-hmm.
pattern. At the end of
Yeah.
the day, as you just mentioned or stated, the donor will be poorer at the end of the transaction. There is an
Yeah.
intent of making a donation,
Yeah.
right? There is a
Yeah.
cash flow impact of for a certain period of time by the time you file your tax and everything. So at the end
Mm-hmm.
of the day, you will be missing a few dollars
Yeah.
out of your wallet or portfolio.
Mm-hmm.
Absolutely.
Yeah.
So that is, it's a very good distinction between some of the previous arrangements that there were actually schemes because you were actually in pocket at the end of the day.
Right.
With our strategy, you will not be in pocket. We
Mm-hmm.
have to remember as well that the flow through share regime basically allows individuals to continue working in these projects up north, right?
Yeah.
So I always say your Montreal or your Toronto or your Ottawa deduction is a salary inclusion in the Ring of Fire or in Val d'Or, Quebec, right? Because
Mm,
this is keeping people employed in these
right.
projects to continue the
Yeah.
development or the exploration of a
Yeah.
mine. Okay.
Yeah.
Mm-hmm.
And maybe another way that I can maybe kind of explain it to small business owners too is that, as a small business owner, some years you have like losses, right? Some years you make a profit. And thankfully, there's some sort of Income Tax Act paragraph that allows to go backwards or forwards when you have losses to claim against
Exactly.
the profits, right? And so what's happening with these mining and exploration companies is that you start off, you have a bunch of losses, right? But you don't have any income. So there's no like, they can't net it against each other. So one way they raise capital is by saying, hey, I've got a bunch of losses that the investors are allowed to actually claim. And so, for the benefit of doing that, the investor pays money to have access to those losses, because as an investor, you have income. And so you can apply those losses against the income. So for the CRA, like whether it's one or the other is okay. And you're just kind of paying to have access to those expenses that you can claim, right? And so that's what I understood as like a really good way of explaining the concept of like, why do flow through shares even exist, right? And
Mm-hmm.
then the other thing that I can also elaborate on is like, we've often helped small business owner donate money, right? Just overall. And one of the first clear things to say is like, don't just like send money to the charity. Like if you have stocks that have accrued gains, like donate that. And that's the first part that you
Mm-hmm.
talked about. That's like, if you have capital gains that are not that are just accrued, so you didn't actually sell them yet, you can
Mm-hmm.
donate that and you get to just not pay tax on that gain, which is like fundamentally a thing in the Income Tax Act that happens all the time. And so it sounds like, what PearTree did is you're kind of capturing the flow through shares, you're getting you're also making use of that exemption of the Income Tax Act, because the CRA put this out because they want, I'm going to say, wealthy individuals who just have a bunch of shares but don't have actual
Mm-hmm.
cash to also give that money away to charity, right? So they're kind of incentivizing it. And then you also get the charitable receipt. Again, you won't make money on this.
Absolutely.
You're just gonna cost you less to make those kind of big donations, which I think is a very powerful